Well, CNBC TV18 brings you a fresh series, CNBC TV18 Checks In. And I have, a very, very important guest with me, Mr. Kapil Wadhawan. Well, many people don't know, but, under Kapil's leadership, the assets under management for the entire group has grown from nearly $1.5 billion in 2009 to nearly $20 billion. That means a growth of nearly 15 times in the last 8-9 years. Kapil, how the journey has been for you? It's been a roller coaster ride for you.
It surely has been a roller coaster ride. When my father passed away in the year 2000, at that time DHFL was a small enterprise, but with a strong foundation. And from there on, in the last 17 years, obviously we've seen many challenges, but we have. I would say that we have done well. There is a long way to go. There is a long distance to cover.
How was it? You were studying in Australia, doing your postgrad at the age of 30, and at the age of 37, you were told to handle DHFL, right?
Honestly, I was 24 when I joined the business. This year I complete 20 years in the DHFL family, and so yes, it was. My father was around, so obviously he was my mentor. He was my guide, my philosopher. Whatever I have learned has been under his aegis, and yes, it was unfortunate that we lost him too early.
What is the biggest lesson you take away from the last 15-20 years of the business, the family, ups and downs, and everything? You've seen everything,
I guess it's perseverance, which pays. You have to be patient. You cannot, and you have to be very long term in your thinking. My father always used to say that you dream big, and as you mentioned earlier, from a small housing finance company to a meaningful housing finance company focusing on my late father's vision. It's been a great journey so far.
Do you think you have got your due, or even Diwan Housing, has got its due for the work you have done in the last so many years?
I think so. Yes. I mean, if you are specifically referring to, how the capital markets has rewarded us, I guess I somehow believe that good work gets rewarded. Okay, whether it is today, tomorrow, day after. I'm very certain that whatever effort, whatever vision we have set for ourselves, will get duly recognized by the market. Obviously, on a relative basis, we may be, we may have a relatively smaller market cap as compared to some of our peers in the market. But then, mind you, our focus has also been extremely retail. Retail housing finance has been our focus, and we have not deterred away from that focus at all.
As an industry person, do you think that there is a lot of over-exuberance which is now happening in the financial services space, especially the housing finance companies?
I think we should recognize that housing finance or housing per se has become a sector which the government has laid a lot of focus and emphasis on.
True.
Now, on the back of this, if you simply look at the mortgages outstanding to the GDP, we are at about 7.5–8%, which is very, very low as compared to some of our Southeast Asian peers. Obviously, much lower than some of the Western counterparts. So with a housing unit shortfall of more than 40–50 million units, government's vision of housing for all by 2022. I guess that has prompted a lot of people to come into this sector. To get their licenses and get going, but it worries me as well. I think this is one thing that gives me sleepless nights.
Because everyone now these days is a housing finance company. Whether they have a LAP portfolio or a portfolio against construction or whatnot. Don't you think there could be a shakeout, which could happen, if not now, sometimes later?
I think that's for the obviously our regulatory regime to ensure that we avoid the pitfalls and the risks associated with this kind of growth in the number of companies, and surely it's a challenge. it's a challenge, but then we are a free enterprise, we are a free market, so people can very well, get in and get out as they want.
The reason why I ask is because, if I just look at the numbers, in terms of the profitability numbers, a very less proportion of the retail, pure retail housing comes into the numbers. But that is more coming from LAP or, other more things. But you said that you are focused on pure, or you already have 70-75% coming from housing, right?
Yes.
What is the plan on that side?
I think we have not moved away from our stated objective, and that is to house the common man, the common Indian on the ground. So our 350 offices covering almost 75-80% districts, addressable districts in the country. Our focus will continue to be retail. 75% of our focus will be on building a strong retail franchise in the lower and the middle income segment. Now, lower and middle income segment is what DHFL...
So the average size for you could be what, 16-17 lakhs?
16-17 lakhs is the current average size as well today. And we don't want to move away from that focus area because that's where we see the biggest potential and the biggest market growth happening.
So how much growth you envisage? Your lending book or the assets under management could be what, 88-89,000 crores if I'm not wrong this point of time in next 2-3 years?
I think in the next 3 years we have, even with a 20% growth, which is what we have envisaged, we are looking at getting to a compounded, cumulative assets under management of close to 2 lakh crores.
Wow.
So yes, we would like to obviously keep certain surprises as well for the market. We don't want to, be too over-optimistic on the numbers.
But you think 2 lakh crores in the next 3 years is possible?
It is the stated objective for the DHFL.
What about return on equities, ROEs? Because a lot of analysts talk me, and I'm sure you may not like it. But how can ROEs improve from here? Is capital allocation a problem?
See, our net worth by the end of this financial year will be closer to 10,000 crores. In the last year, we infused 2,000 crores of non-dilutive capital. So as a capital-hungry business, which obviously is growing, quite rapidly. We have done infusions in the past of capital, but this is the first time that we have infused capital, which is extremely non-dilutive for the shareholders.
But that's very important to understand because your deal with WGC, the Wadhawan Global Capital, putting in 2,000 crores may not be well understood by the markets. Elaborate a bit on that.
Wadhawan Global Capital was formed a couple of years ago, and the idea was to consolidate the holding of the family under the WGC umbrella for all the financial services that we do. As you know, 3 years back we got into the life insurance business in partnership with Prudential of US, and surely we started off on an extremely positive footing. The year we entered into that partnership, we started turning profitable. DHFL has a very strong captive, business base, plus management change, a new perspective. Obviously led for that business to become not just profitable, but also is being recognized today as one of the most aggressive life insurance companies in the country. So DHFL's entry point was at a very small capital investment. We made a small capital investment of about 35 crores 3 years ago. And we recognize that, yes, there is enough value which we have created in the last 3 years for DHFL to now,
that's the best the market is giving in the euphoria.
Capitalize on that investment. So Wadhawan Global Capital pitched in, WGC went out, borrowed money, and obviously in a very tax efficient way we infused the capital in DHFL. So obviously that led to some net worth moving up, the return on equity coming down a bit. But I guess with that infusion we kind of took away the capital raising issue because we were pretty conscious that DHFL, the market cap is not good enough for me to go out and dilute further in the market. So we got the capital in, and we've kind of taken care of DHFL's capital requirement for the next 2 years or so.
So you're saying no capital requirement for
the next 2 years.
housing for the next 2 years?
Absolutely.
You plan to list WGC? I'm just trying to understand the reason of forming WGC, because it's not only the lending business, which everyone talks about, Dewan Housing, but you also have insurance, you also have investments, which I think people may not understand. And you being the group chairman for WGC, you may have bigger plans going ahead, right?
Surely, but WGC's formation, again from a consolidation perspective, came with a new vision as well, and that vision was that why not look at beyond housing finance? Whilst DHFL is the flagship and will continue to be the flagship for the group, let's start looking at protection. Let's start looking at investments. Let's start looking at some strategic investments, whether it's domestic or foreign, and WGC could be the vehicle for making that happen. So yes, in the investment space, we have the asset management business now in partnership with Prudential. We have Arthuveda, which is an AIF platform. In protection, we have the life insurance joint venture with Prudential. We have 100% owned and now fully licensed general insurance company, which will get operationalized very soon. And then we have a few other lending platforms, DHFL, YC, Aadhaar.
At some point going in the future?
I think looking at the exuberance, it would be logical for us to looking at some sort of a capital planning going forward from a WGC point of view.
Since Dewan Housing is the only entity which is listed, so I'll focus on that. Okay. So how much ROEs you think could improve for Dewan Housing with no capital requirement in the next 2 years?
I think we should be over 20%. I mean that's what by 2020.
So I think the bigger thing what I'm taking away is that by 2020 the assets under management could go to 2 lakh crores and the return on equity could be over 20%.
Over 20%, yes.
Well, that's a big task. That's an interesting thing also. What will be the portion of pure mortgage loans, okay, to retail, which will sustain for Dewan Housing?
I think 75% is what we would like to maintain as the retail housing finance focus for DHFL.
Well, just don't go anywhere because there's a lot more coming from Kapil. Few things on his personal side as well. So meet you just after the break.